welcome back to another edition of No See Feel the Market, show number 11. I'm Patrick, your host for this week, and let me introduce you to my two market assassins. First, we have the silver man himself, Max, and straight from Hawaii, we have Everson, the only guy I know that can manage 50 different stocks and still tell us about new obscure ones every week.
Hey, Max used to do it. Max did more than I did.
So before we get started, let me just give everyone the usual disclaimer that we're not your financial advisors, and this show is only for entertainment purposes. So all investments have a degree of risk, so never invest more than what you're willing to lose, and always consult your licensed professionals. So before we get started, we're going to talk about two amazing topics today, mostly. First, the big pump and dump on Victo IQ, Nicola, and then we'll have a talk about good old Warren Buffett and if he's still relevant in today's market. But before I get into that, I'd just like to start with Max, get us started about what you saw this week. And I know that our silver man crushed it this week since silver popped to 1551. So Max, what did you see this week and how did you do?
This week, you can see that the SPY, the whole market, is just sort of in this sideways channel. But we talked a little bit about it last weekend, last episode. We talked about 10% increase in inflation, consumer goods, and you can see that the investors actually responded to that, going right into silver and gold to protect themselves against that inflation. So silver definitely popped. And you're seeing, I think it's going to keep going up for a while. Maybe it'll retrace a couple of times. But anytime you hear these big numbers, 10% inflation, I mean, that's unheard of. You know, just to put it clear, we put $2 trillion into the market. That's 10% increase in inflation. We're about to put another $3 trillion probably. We'll see where it goes from there. So you can see a lot of investors trying to protect themselves with the silver and gold.
So,
and how did I do? Well, basically, like Everson texted me during the week, basically just listening to classical music and collecting my theta.
So I collected 2 premiums on silver. Like, how did you do, if you don't mind sharing?
To be honest, I'm not doing as well as I did with U.S. oil, just because U.S. oil was allowing me to basically pick up 56 cents twice a week, double rent. So I'm not picking up double rents here with silver. I didn't do as well as I should have this week. I was a little bit more aggressive than I should have, but still producing money and recalibrating for next week to try to maximize a little bit. So last week, didn't make as much as I was supposed to, didn't make as much as the past couple of weeks, but I'll recalibrate and I'll be fine.
All right. Well, so far silver has been pretty easy money. It's very relaxing and soothing after the wild ride that was USO. What about you, Everson? How have you been doing?
Good. I did silver and gold also.
Want to be on a silver train too?
I've always been, I think for all of us, or at least for Max, well, Max will always be in silver, so he kind of stays pretty consistent with that. But I follow the trends. And so, I've seen an opportunity to get into silver and gold, and that's what I did. I got into a couple of ETFs for silver and gold and doing pretty well with that. I think the trend continues. I mean, like Max was saying, you got the inflationary that's affecting everything, and we're looking at potentially bringing another $3 trillion in debt. Other sectors that I hear as a topic of conversation was not sectors, but parts of stocks. I think the dividend is being affected also. So when I look at especially your REITs, where they're paying out high dividends, what makes us think that that's affordable? But then again, you get companies like, you get some companies that are offering astronomical, the FDIC worth dividends. I don't know how you could pay that out, to be honest. I mean, you're not getting a lot of investors for it. There's business is barely even moving, even if we started up the economy. How does it even play out? Like, how does that even make sense? I don't know. But silver and gold, nonetheless. Energy sector, I got out of the energy sector. Not to say that it can't pop again. The technology sector, I got out of the technology sector for now, also, but I sold out on that. So right now, I guess I'm just strong with commodities. Just interested in seeing where it was going. But how did you do?
Well, so what's interesting is this week, you were just talking about how you took profit out of some companies. This week, one of the big investors on CNBC said that right now it's pretty much like the most expensive stocks have been since the tech bubble in 1999. How stocks are very overpriced based on the current condition of the economy and all of the uncertainty. So yeah, I mean, I think that it's a good thing that you took some profit out. One thing I want to ask you guys about is, so silver's popping a little bit, but gold isn't getting that much higher. It's still under 164. What do you guys make of that?
So that ratio between gold and silver that's been stable for what, 4,000 years. We were actually at the extreme of one. I think it was $120 of silver to buy, or 120 ounces of silver to buy 1 ounce of gold. So we've retraced from that point, but we are still way overvaluing gold in terms of silver. And so now we're seeing silver catch up a little bit, which, is overdue. And I think that ratio will get smaller and smaller over time. So even if gold keeps going up, silver will go up faster than gold, just to make up for that ratio difference.
Yeah, it makes sense. So I'm still looking for gold to stay under 164. So far, I haven't had to adjust, but we'll see this week.
You said 170. You brought it down?
No, I'm at 170, but if it goes above 164, which we said was the resistance, then I'll have to maybe adjust. But yeah, this week was really good for me, honestly, in part because of one of the topics we're going to talk about today. I did a play on Victo IQ. For once, this time I was on the right side of the pump and dump. I wasn't the one holding the bag, so that was good. So I'm in a decent amount of money with that. And after that, yeah, I did a few trades that were pretty good. One of the dividend stocks that actually Everson recommended a while ago did pretty well this week since they announced that they're keeping their dividend. So yeah, did pretty well. In the market, I haven't seen anything really spectacular. As Max said, I mean, it's basically sideways. We saw a little bit of a downturn early on in the week, but nothing like earth-shattering like a few months ago. So
Well,
yeah.
I made big valuation on the food sector. I mean, it's your precious commodities that I think do really well in this type of economy. So, I mean, I know I did a trade on UNFI, and it was popping like 40% in a day. So I think 2 days. I mean, take the time, look at the stock in a few days. Not to say that it's going to go up from here. There's a lot of, anytime you get that kind of valuation or a stock pops 40%, 50%, 60%, a lot of it is in the pharmaceutical sectors. If you really don't have a level of understanding, right on cue.
Told you guys that we're market assassins, and another one bites the dust. But
so like when you see valuation stock pops like that, you really got to be vigilant as to knowing the fundamentals, knowing the news, knowing the charts before you know that, okay, this is a safe time for me to get in. This is a safe time for me to get out. I'll show you one stock that you can take a look at. That on Friday it took off 158%. The stock is SRNE Therapeutics. Does it go for higher from here? I think it drops. But would you know that? I don't know. I mean, it's up over the year, 81%. In 3 months, it's up 163%, 150 in the 1 month, 160 in the 1 week. So literally, it just did a pop for just a shorter period of time. But that's your pharmaceutical companies for you. I mean, pharmaceuticals do that, but it's a trade, right? So, I mean, that's the exciting part. You want to see the returns of 1,000%. You want to see the guts and glory, and that's the guts and glory, I think, is with those fast trades. But knowing when to get in and out of it, it's dependent upon individuals. I wouldn't treat this as an investment. I treat that as a trade. But
what did I say last week? The Delta traders, man, they're the ones that drive the Lamborghinis and make the big bucks.
I heard from this is off subject, but I heard from KSI. He's a popular singer in Europe. KSI says that he hates Lamborghinis. Like he said, they don't drive well. They're horrible cars to have. So he sold his Lamborghini. I don't care for like fancy sports cars myself. Like, I don't like them.
But anyway, this is a good opportunity to get into our segment. So this week was really interesting. Late last week, I heard about this stock called Victo IQ, which on the stock market is VTQI. And I actually told the guys about it. At the time, it was $20. And there was a massive, massive spike on it. But what's interesting about it is that it's not based on any sound fundamental news that came out this week or anything. It's a stock that's been there for a few months now, just waiting for next month to merge into Nikola, which is supposed to be competing somewhat with Tesla, but in the semi-truck market. And when I heard about this stock, I looked into it, and the technology seems promising. It's very interesting, but the stock shouldn't be valued at where it is now. But what I did is I actually bought a call on it, and 2 days later, because every day it was gapping up by like $3-4, and it went as high as $34. So I managed to double my money with that in 2 days, and then I managed to get out of it before it started falling. But what I found of note about it is that, like, this to me was a classic pump and dump event. Like, nothing really happened that promoted that stock to go up this quickly. Like, the value didn't change in 5 days to make it go from $15 to 34. And this made me want to ask Everson, since he's investing in a lot of stocks that have those gap ups like that. Like, how do you determine what's a pump and dump versus what's just a really fast growth stocks or something that had an event that made it really pop overnight?
So your pump and dumps usually, we had one stock, I don't know if we talked about it on air, but we definitely pulled aside later and sort of talked about, I think it was Liberty TripAdvisor. And I forget whether it'd be A or B, but I think it was the B, not the A.
I think it was B. Yeah.
It was B. Yeah. So I don't know whether that was the common share or not. I don't think that was the common share, but we saw huge price action on it. It popping all the way to, was it close to 1,000%? It was like 900%. It popped.
Yeah, it was ridiculous.
And so
it went from $4.99 to $134.
Yeah, so that was way back. That was a couple of, maybe about 2 months ago, perhaps. We're still fresh into what's happening with this recession and everything, and what was happening with the virus. So when I look at it, and I look at valuation that's like that, I'm usually hesitant. I want to know what's happening. A lot of the inside moves that happen on pump and dumps, you probably wouldn't, by the time that you know about it, if you hadn't gotten in already, then the opportunity is already passed. Oftentimes, penny stocks do pump and dumps, and you can find this out by knowing who started the company, or who's initiating the IPO for the company. And naturally, what I've seen in the market, and even Tim Sykes will tell you this, is the Chinese companies, when they come into the market as an IPO, naturally, just starting fresh off the IPO, they're retrofitted to become a pump and dump. So they're taking a lot of assets initially, and then maybe as they build themselves into the American market, then they get more realistic valuation, fundamental valuation, and everything. But I would be a little hesitant. I'd be a little careful about that, because I hear that there's a big plan in place for like WisdomTree is one compiled ETFs that's based out of China. China is wanting to get into the U.S. market, which is really dangerous because, for obvious reasons, you don't want another foreign entity taking control of your stock market. So there needs to be a little bit of regulation as to how much foreign interference can get into our stock market, I think. And we kind of need to centralize our asset base within the stock market. So I would really play statistics. I would really play fundamentals. I'd really play the news to be able to get that mindset, whether this be a pump and dump or whether this be something for the long term. And then also seek advice from, people like Max, where you look at the charts, you get a good price action for the charts. And then also, ask questions to us, reach out to someone like myself for the fundamental view, or someone like you, Patrick, for the news, the insight. So
yeah, so
that's
when
what
I
I
heard
would say
about
about that.
when I heard about this stock, I looked at it and I'm intrigued by it. I think that it has potential
Well,
eventually.
Patrick, let me ask, how did you hear about it? Because that could be part of the pump.
Well, exactly. That's what I was getting into, is that I heard about it from a YouTuber that has a lot of subscribers. And my thinking was, okay, well, if I get in now, as more and more of the people, it's like a snowball, right? As the snowball grows, new people are going to hear about it, especially when you get into forums and stuff where there's like this frenzy, right? You could feel the frenzy around the stock based on nothing, which led me to believe that it was just a pump and dump. But I was like, okay, well, who's going to be left holding the bag? I didn't want it to be me, so that's why I took profit as soon as I could. I set my order at a certain level, which I was comfortable at. And even if it went a little bit higher, I didn't want to be the one holding the bag at the end. But that's how I noticed it, is that one YouTuber started talking about it. Another YouTuber with a few 100,000 subscribers started talking about it. And there was this frenzy about it where it started there. There was a disconnect between where the company is at now and where you think it's going to be. Like the merger meeting where they're going to vote on if it goes through or not is in early June. Well, they were expecting the company to merge at a valuation of about 3.3 billion. And based on this number, where the stock was now at $34, it gave them a valuation of 10 billion, saying that people were boasting it, saying that it was going to compete with Tesla and everything. Well, even Tesla, it took years for it to start doing anything as a stock. And this company won't even launch their products before 2021. Like, they haven't created one truck. So I mean, it's pretty crazy. Like, I say that the market's a little bit of a clownery sometimes. It's not serious. It's complete manipulation.
Well, so there's a niche in the market for electrical vehicles. And so there are a lot of investors that are trying to find the future of electrical vehicles. And so you saw the same thing with NIO when it was on 60 Minutes. It popped all the way to 10, 11 bucks and then came back down. People are looking for that stock because they don't truly, I mean, and that's why there's that fan base for Tesla. But the investors that are looking at the fundamentals, they're like, well, we want a company like Tesla, but we actually want a business that's well run instead of just being a fan club. Don't get me wrong, the technology for Tesla is amazing and they're pushing boundaries, but as a business, they're not a good company. And so, like I'm saying, there's a niche. These investors are looking for the greatest electrical vehicle company to come out. It's not out yet. They thought it was NIO. They probably thought this Victor IQ was the next thing. It's not out yet. I don't think it is, and I don't think it's going to be Tesla. Tesla's going to push the boundaries, but Pioneer don't pay.
Yeah. So what do you think about it? Do you think like me? Basically, my opinion is that the company has promised. I'm keeping it in my, I know you don't like speculative stocks, but I'm keeping it on my watch list. I'll keep monitoring it. Once the merger goes through, once they make progress on their construction of their plant in Phoenix, once the ball starts rolling, then I'm going to look into it and see if indeed they can actually eventually compete. Because they're talking about building infrastructure where they need to put hydrogen, refueling stations and all sorts of stuff like that. That's going to take billions of dollars to build infrastructure. So we're not there yet. So the verdict on Victo IQ from both of you?
I think that area is just way too saturated. I wouldn't get involved.
And on my end, I just think it's that niche. Like I'm saying, people are looking for that company that's going to take the whole sector, and I don't think this is it. But if you do want to speculate, do some delta trades, I would actually buy my calls before the merger. Have a nice little 1 or 2, 3%, and just make sure you cut off your wings by selling some calls and see what happens during the merger, because that's where the money's going to change hands. If it doesn't go in your favor, you just risk a small portion of your portfolio. If it does exactly what Patrick's predicting it might happen, you know what, you might have made a couple of bucks there. So just look at your risk reward and make sure you cut off the wings so it reduces your entry fee and make some good money that way.
Yeah, that's good advice, because it's the type of stock that can either make you 10, 100%, like 10x or 100x or 0. So don't risk all of your money into it. So
it's
let's
just too speculative when you have a blank check. I mean, it's a blank check company.
Well, now the founder, which has no experience running a major company like that, is now a billionaire. I thought that was interesting.
Are you talking about Milton, Trevor Milton?
Yeah, I was joking with Max. That just proves that sales is the #1 skill you can develop. Because if you can build a company that has nothing really show for it yet and be a billionaire, sign me up for that. But anyway, speaking of billionaires, our favorite billionaire, Warren Buffett. I just wanted to talk about him a little bit because we all agree that he's probably the best stock market investor so far in history. But the past decade, I mean, his performance hasn't been stellar. So, we always hear about him still now in 2020. He had his big business meeting 2 weeks ago, I believe. Everyone every year always looks forward to what he has to say. But what do you guys think? Like, is he still relevant in 2020? Like, what can we learn from him at this point?
He's a good
Emerson,
risk
you want to
manager.
go first?
I think he's a good risk manager. And as far as, sorry for the adjustment of the camera, I think that as far as an investor and being relevant and current moving forward, sure. I mean, he's going to be in a platform when you got that much billions of dollars to throw around. So he's going to still be there. As far as his accuracy on trades, maybe there's a little bit of complacency kicking in, thinking, I don't know what he's thinking. He's always not been good at direction as far as change. So maybe he does look at the charts and everything. I'm sure that even if you're a fundamental, because as we all know it, Warren Buffett, he's a fundamental guy. He's not very much of a chart guy. And he's sort of old-fashioned and everything. So he does restrict himself from technology. He does restrict himself from a lot of detail that you could get a lot easier moving forward. So I don't think he sees the big picture anymore. especially with the changes that's going on in the industry. I just don't think that I think he's becoming irrelevant, but you can never lose the fundamentals of the market, especially if you have that much money. You're going to go forward. But, like you were saying, Patrick, it gets to a point where, you're not even meeting expectations. The S&P 500 is doing better than you.
Yeah, so just to set the context for viewers and listeners, in the past 10 years, his company, Berkshire Hathaway, has lagged the S&P 500. So basically, they haven't beat the ETF. So also, what's interesting is some of their acquisitions, like Kraft Heinz, hasn't been working that well. And then he made the bid on the airlines industry, which I talked about it a few episodes ago when I said that since he invested in it, I was going to keep an eye on it. And my thinking about it is that, and I know a lot of investors did that too. My thinking is that when you have a big investor like that backing a stock, it's a good sign because you know that there's big money that's going to put a backstop to it. That was my thinking about it. And I know a lot of investors have been looking at it, but now that he pulled out, and I mean, they took a pretty good loss on it because the stock when they bought it was in the mid 40s and he sold in the low 20s. So, did they lose their touch? I mean, they're sitting on 137 billion. They haven't been making any big trades. Max, what do you think?
I think that.
And Everson.
So
he thought that he could make money, and he thought he could make money off of it. And I mean, Patrick, you and I had horse sense on it.
Look, I mean, he's always going to get too early just because of how much money he's dealing with. But over the course of the stock market history, there's always been, this one market guru, for a decade or so. Maybe it's usually a lot less than that. But they are in perfect sync with the market, and they make the most money. What's interesting is as soon as the market changes a little bit, these market gurus are done. They cannot make a penny in the stock market just because what worked before doesn't work today. Now, the reason why I talked about the gurus is because Warren Buffett is not a guru. He's actually looking at the stock market as an investment, and he's looking at it way longer than anybody else is. He's looking at Coke, and he's saying, okay, what is Coke going to look like in 50 years? He's not looking at it, in a year from now. And so to call him irrelevant, I think that's premature. So just because he didn't, exceed what the stock market has done in the past 10 years, he still made money. And the thing is, he's making
an
more
investor.
money.
He's not a trader.
Right. And the thing is, he's making money off of all of our money. Why? Because he's in the insurance company. So he gets paid before anything happens, takes that money and puts it in the stock market and makes a return on it, either through capital gains or dividend play. So I just think it's way too premature to say that he's irrelevant. He is a very good investor, and he's using other people's money to make money. And, you just can't understate that. He is very good, very smart, and his entire machine from the first dollar that gets into his hand and how he increases it, multiplies it, it's immaculate. It's perfect.
But the latest bets that they've done have been inaccurate. We agree on that.
Yeah, but that's short term.
Okay, so if you're seeing long term, 50 years from now, why did he pull out of the airlines already?
Because it needs to stabilize. I was actually thinking the same way as Warren Buffett. I was like, what? You know what? The economy is going to get back on its feet. This virus is going to get kicked out, and we're going to move forward. Well, that didn't happen. He bailed out. He said, what I believed was going to happen didn't. He got out. And that's a great lesson for people at home that are trading. When you are going into a position and you've practiced all your rehearsals for, if it goes up, sideways, or down, if it's for you or against you, if something doesn't happen exactly the way you had projected it, get out. What you thought, what you visualized in the market is not happening. You're not in sync with it. Time to get out or make an adjustment. And that's what Warren Buffett did. The only difference is he's making it through the news, so everybody knows his mistake. So instead of losing more money and staying into an unstable market, he's out. what's interesting is now he's reallocating some of the funds that he has in the financial sector, going from a couple of banks now to one bank, which is really interesting. I think it's too premature to go in financials right now because they're going to get a delayed hit from this coronavirus. They haven't been hit that hard yet, but I tell you what, a couple of months they're going to get hit pretty hard. So I just think it's too early to get in financials, but that's my point.
Well, let's get into
Well,
that real quick. Why do you believe that, since the government has basically said that they were going to spend any amount of money and have even created special purpose entities to buy debt, to buy MBS and all that stuff?
I just wanted to touch base real quick before you move on to the financial topic.
Sure.
Just going over what we both were talking about and what Max was last saying. So the question was, Patrick asked whether Warren Buffett was relevant or not. I just to go back on it, not that he's not relevant for the future, but he's not relevant in these markets, and he's never made a good trade when it came. He's never made a good investment when it came to trade, because trade, you need to be in and out. I mean, we started off the show as assassins. To speak about being an assassin, a trader gets in and out. The trader doesn't stay in the market like he's comfortable with. Staying in the market, sitting on good dividend, it doesn't work that way. It's just in a highly volatile market, you don't stay in it, you get out. And so I think that's where we're at right now. And with the speculation as high as it is, either you're buying time like Max is, or you're trading like I am. You're not staying in the market.
And also, I mean, in 2008 to that recession, he used his money to bail out some companies, and that's how he got really good deals. But this time around, instead of having, I mean, he actually talked about that, so it's not a secret. Instead of going to him he started getting some calls from companies that were shaken by the new recession. But then the government came in and said, "Oh, we're going to inject trillions of dollars in the market. Everyone's liquid now. Just buy whatever." So he wasn't able to be that savior this time around.
I'm sure that he could if he wanted to, but he just spent it all on his losses with the airlines. So
yeah, he said that the companies were able to get what would we say, terms that his company wouldn't be able to give them, more favorable terms from, the government injecting money into the economy.
He's probably trying to collect on high premium.
So I think he got blindsided by that. But Max came up with a really, really good lesson that we can still learn from him. But my opinion is that even though we all love him, he's the miracle of Omaha, he's a little less relevant now than he was 10, 15 years ago, personally, I think. But Max, why don't you...
It depends what your trading style is.
Why don't you get into the financial institutions? Like, why do you see them to be shaky?
So we're getting more and more unemployment, and the longer we're staying, the worse this crisis is lasting. The less it's a sure thing that people will get their jobs back. Right. So the longer this crisis stays, the lower that percentage will be of people, not just being temporarily furloughed, but actually being fired. So I said that, numbers between 70 and 80% of all employment that was being recorded would come back very quickly. But as time goes by and we're not reopening the country and we still have that virus going around, that number decreases just because companies are now making decisions that are saying, hey, you know what, we're going to actually fire these 500 employees just because I don't think our number is going to reflect that. And so that's why that one investor that said the market was overvalued, he's absolutely correct. I mean, we are almost at the same height that we were before the coronavirus, but the earnings are a lot lower.
Yeah.
So you're talking about the same price as before, almost the same price, a small discount, but the earnings are way lower just because of how the market's being affected. So I see his point that the market's overvalued right now, and if you're looking at getting a good discount on a stock, now is not a good time. But what I was leading to is that this is just unprecedented times. So that's why Warren Buffett's like, hey, I thought something was going to happen. I got in, it didn't happen. I'm out. I'm just going to try to see what's going to happen. And so going to the financials, you're going to see repercussions of people not getting a job as quickly as they thought they would. There's a long line on the website to collect unemployment. People are waiting, 2, 3 weeks before they get their first check. In fact, I think the was it mayor or governor of Florida blamed the employees that lost their job for the crash of their website. I mean, we're getting really high in these numbers, and I thought this crisis would be over a lot quicker than it is. But the people that are going to get hit a lot will be the financial sector, and they're not going to get bailed out as much as they think they will. Just to tell you, this $3 trillion stimulus that we just talked about that the Democrats are pushing forward. Trump said that he was willing to let it go by and agree with it, but Republicans are playing hardball.
Yeah,
So
the
that three
Senate said that
trillion
it
might
was dead on
actually get
arrival.
trimmed down. So any new stimulus will actually have to be perfect in order to pass through, and some of that money is not going to make it to the financial sector. So my opinion, it's way too early to get into the financial sector, even though it just showed a bullish engulfing pattern on the charts, which is a bullish pattern. I'd rather go into something more like energy and tech. If you're looking for something to go up, get into energy and tech for the long haul. That's a pretty good play right there.
You don't think
Yeah,
that you don't
go ahead.
think that they're going to play it off with the energy sector and give some stability? I mean, do you think that Saudi Arabia is done playing games?
They're always playing games, absolutely.
I
But
just think that it's such a big coincidence that OPEC decides to do well. You know that China and Arab countries, they train every year militarily. I just find that a pretty big coincidence that it happens where the coronavirus pandemic happens right around the time that OPEC decides to just flood the market with oil. Just, I mean, what a big
you're right.
coincidence.
The coincidence.
How does it happen that way? Oh, we're oppressed by two sides. But what I think is even more interesting to me is, the Iranian commander getting taken out. And so I guess let's go. I'm getting carried away. Let's go back to the financials. So understanding that, I think, is to understand the subsectors that's happening in and around the environment. So I mentioned a few points that was interesting to me, which kind of plots more or less like a conspiracy. But how does those sectors affect other sectors? These subsectors, when you understand what's going on, you understand where the manipulation might be. You understand how it's effective and it plays a part in other sectors. For instance, like we were talking about back in 2008 with the financial bubble and the mortgage bubbles, when they started to, obviously different terms, different situation when it happened back in 2008. These are different terms in a different situation as well. So we look at the stability in the markets, but how this is different with the financial sector in the past? Well, I think that our financial institutions, although they're having less in revenue growth, they're making good on earnings, but they're changing, they're adapting, they're growing, they're staying ahead of the trend. Something that, Warren Buffett makes a mistake. He tries to stay ahead of his trend of investing. I think that the financial institutions are thinking more like traders, and they're jumping into it. If we take a look at the 10-year Treasury note, it's up 3.39% on a day. That's the indexes, the Kobe 10-year Treasury note, just all of the bonds in general. I think that they're being smart about it, and they're flooding the bond markets to have that stability. It's low growth, but it's like Max, you're making profitability on something small, but you're making profitability. So they're sustaining themselves, which why my voter confidence would be for the financial sector. I think that they're doing the right things to position themselves correctly. Another area you could look is the Russell 2000 index. they've positioned themselves correctly, and I think that they're not going to let themselves go back to 2008 standards. That they're gonna persevere. That they're going to innovate themselves and maybe even get into the Bitcoin market. I see a lot of them getting into the Bitcoin market. We saw some fluctuation in that.
Even if they have better rules, procedures on how to lend money, I still think they're going to get affected by things that you can't really predict. I mean, this whole economy right now was unpredictable.
Right.
I mean,
Absolutely,
no one predicted this was going to happen.
But with the government now buying bonds, ETFs, and printing unlimited money, that doesn't give you any confidence?
No.
Like, they literally said that they were going to do anything necessary to keep the economy going.
And you know what? Words mean nothing.
That involves, well, it's not just words now. They actually started buying bonds and ETFs,
right,
and injecting massive liquidity in the market. So it's not like in 2008. That's why midterm, I have much confidence in the actual banks. I don't think they're in any trouble right now. But I do know what you're talking about. Like, yeah, is there going to be more defaults? Probably. But I think that they're in a much better situation than they were before.
Yeah, I agree with you. I agree with you, Patrick. Like, I think that the financial sector is okay. They're not perfect. No one's bulletproof in a market like this. You see some downward trend from here. Sure, I see some downward trend happening, but as far as long as we have these stimulus checks coming in, most people are scared. So, a couple episodes back, I think it was on episode number 8 or something, or maybe it was episode number 9. We talked about whether to stay in cash or not. Max had said that cash is not a position. I feel otherwise. I think cash is a position. And I think that's where people are. People are in cash. And they stay in cash because they're speculative. They're not sure whether they want to be in the market or not. When they have a certainty on trade, then they take their cash position and then they get into the market. I'm a firm believer of that, staying in cash until you see opportunity. But in a market like this, don't go all the way. Just you gotta keep a safe haven, and I think that's what banks have done. Is they kept positions in a safe area. That's why they're not releasing so many loans as they are. The coronavirus loan, which is what a lot of institutions that I've seen in recent days have done, it's a good rate. It's like a 0% rate. I mean, why wouldn't you take advantage of that opportunity? Personally,
so let's just get on with the stimulus check, because not check, but the new stimulus package.
No, I was going to explain the whole theory as why financial is not a good play right now, but go ahead, Patrick.
Well, I don't know if we have time for that today, but let's just move on with the stimulus that you were talking about. So has it been passed in the Congress yet?
No. They're going to wait over the weekend.
So it's hit the Republican. So Republicans own the House?
No, they own the Senate. So they already said that it was dead on arrival in the Senate. Yeah. But it's going to be interesting if they manage to tweak something. I mean, Mitch McConnell is always, of the mindset that we need to wait more and see how things develop. But if it does go through, I mean, I think that adding another $3 trillion on top of what we're already spending, how can you not have massive inflation? I mean, at some point, it's too much. That's my opinion.
Yeah, that's why I'm not for it, really. I mean, I'd be for it, but then again, I'm not really for it.
Maybe they need to patch some holes, but geez, another $3 trillion and giving everyone money.
That's the problem. That it's too much money. It's gonna create more massive inflation. The problem is it's needed. People are at home having no work. They've tried to actually leave their job and find something else, and they can't do it right now. They need help. And so the reason why I was saying there's a lot of exposure to banks is because they're going to take the hit when people can't pay their mortgage. but more importantly, they have a lot of exposure to corporate real estate.
Yeah.
And those retail companies are actually going to fold first. And the banks are highly leveraged because everyone thought brick and mortar would be here forever. And now you're seeing Macy's, you're seeing J.C. Penney. I think they're filing for bankruptcy.
Yeah.
There's a lot of exposure that banks are not happy about right now.
Right.
No,
I mean,
that's fair.
but I think that's a short term. I mean, the federal government does not want that, that type of fluctuation to happen where we go back into a state of recession, or we're already past recession, in a state of depression. I don't think we want to go into a state of depression. I don't think anyone that runs the country would want that. It just wouldn't look good for any election. So, I mean, why would you want that to happen? It'd be stupid.
So what do you guys see happening this week? What should we look forward to? Max, anything in the charts that we can look for this week?
I think we're going to go back up in that little sideways channel that we're in the total market. But if you're looking for a play up, then make sure you stick with energy sector and the tech. If you're gonna buy some puts or you want to sell some calls, I would suggest going into the utilities and the industrial sector. Because I think those two sectors will go down. So it depends which direction you like to play. If you like to do puts or calls, if you're a bear or bull, it's up to you.
What about you, Everson?
I think the commodity sector, I agree with what we were talking about, Max and I earlier. So kind of the same sectors. I like tech. I like commodities. I like energy. But I like energy on a pullback. I think that it's kind of pulled back a little bit, but it may pull back again before starting new highs. But I'm strong in those sectors moving forward.
Yeah, I'm invested a little bit in XLE, which is one of the energy sector ETFs. It's been pretty stable. It hasn't really gone up or down the past few weeks, but we'll see what happens. So that's basically all the time we have today, guys. I hope you enjoyed this episode. I mean, I found a lot of value in it. I hope you did too. I mean, we're always really excited if you guys want to leave feedback or ask questions. Please like and subscribe. It really helps us, especially since we're starting out. And if you guys have any comment, feedback, I mean, I hope that this week the sound's a little bit better. We had some difficulties a few weeks ago, but we worked on it. I hope you guys enjoy and the quality is there. And do you guys have any parting words of wisdom for the fans?
Thank you for your support. Make it a good
trade or not, the choice is yours.
We love you guys.
The choice is yours.
Stay healthy.
Well, have a good trade week, guys. We'll see you next week, and please come back in droves. Bring a friend. We like it. Thank you.
Bye, guys.